The foreclosure wave is coming. And today we're going to talk about the real estate market updates for 2021. Hello everyone, and welcome back to another episode at Novarise Invest. And for those who are tuning in for the first time, well, this is your channel for real estate education. So hello everyone. I know it's been a while since I've last published a video. We have been a little bit busy with everything that has been going on. I've been making additions to our real estate program, and at the same time I've been busy trying to sort of like maneuver and work on my investments in the middle of all this pandemic, and working on a couple of other surprises here and there. And some might say there's a book coming up, right? But of course, in spite of all of that, I know a lot of you have been sending out messages asking me where I am, how come I haven't published any other videos, and here I am today with the latest update on the market so that you can prepare and know where exactly to go and make intelligent decisions for you when it comes to investing in this upcoming month. And without further ado, let's just dive into what I have prepared for you. All right, so here we are with our very first article, and let's just talk about the eviction moratorium, right? So last time we spoke about this, it has been said that the eviction moratorium will be extended all the way to March 31st. However, according to this article and Scotsman guy, that will most likely depend on the type of mortgage that you have. So let's say, for example, if we scroll all the way down, right? For those loans that have been backed by Fannie Mae and Freddie Mac, those are good until March 31st. However, we do get additional extensions depending on the different type of loans that you have. So those are that are backed by the Department of Agriculture, the USDA, or the Department of Veteran Affairs. For those who have VA loans, you have all the way until June 30th to, just enjoy the extension, I guess. That's one way to put it, so that you can figure it out how to prepare for the next upcoming months. This is the latest that we've had so far from the news, from the Biden administration. I haven't heard of any additional extension, although I have learned that one way or the other, some states are deciding to grant additional extension on top of what we already have at the federal level. So that we're just going to cover that in a little bit. But before we go there, I wanted to touch base on another article that I thought it was very, very, very interesting. And that, of course, still has to do with the eviction moratorium. So it's kind of funny when you put things into perspective. Not even funny, I would say it's a little bit ironic, because the whole reason why there is a eviction moratorium is because one, the government doesn't want the virus to spread out more so than it already has. And at the same time, protect the families so that they don't wind up being homeless and also not being exposed to the COVID. But interesting enough, by granting, let's say, additional extensions to the moratorium eviction, what the government is unfortunately creating is a wave of foreclosure. Because guess what happened? Most people tend to think on one side of the equation, right? They tend to think about the other side, the tenant side. Oh, poor family, they lost their jobs, they're unable to pay their rents. And yes, that is accurate. There are families out there who are in very need of help. But at the same time, real estate investors, they also have their debt obligations. They also have a duty to pay their mortgage to the lenders. So most real estate investors, they use leverage. They have debt in order to push their business going forward. In this case, their rental portfolio. So most real estate investors, they typically have, I will say, somewhere between 3 to 6 months reserve. But this moratorium extension has been, extended a couple of times. And at this point, we have gone beyond the actual year. And I mean, even if you are a saver one way or the other, your funds are drying up, right? So that means that the homeowners, or in this case, the rental property owners, they have two choices. One, to fall into foreclosure, or two, to just simply sell their property. And what does that cost us? So, well, if they cannot meet their debt obligation, they are going to wind up going into foreclosure, and then the bank is going to come and take the property away, which means that for the family who's currently residing there and currently renting, that family is going to wind up being homeless. That's one. Let's assume the property owner manages to sell the property to someone else, who are the buyers today? They're not typically, the real estate investors, because they buy with numbers, right? They don't give in to their emotions, and the numbers are just simply not making sense because everything is just ridiculously expensive in the market. So for the most part, you can expect someone who is buying with their emotions, someone who is looking for a home. So guess what? When they get a hold on that home and then buy that home, guess who has to move out? It's going to be the family, because they didn't buy the property with the intention to rent it out. They're buying the property so they, as a family, could reside in there. So one way or the other, in spite of all the efforts to help families so that they don't wind up being homeless, it ultimately creates a situation where they could become homeless. And this article actually proves it. You see, a federal eviction moratorium meant to keep renters in their homes is forcing some of them out. And as you can see here, the CDC issued a national moratorium on evictions on tenants unable to pay rent for pandemic-related reasons through March 31st. Some landlords, though, rely on rents to pay their property mortgage, and without income, they might be forced into foreclosure. So that's exactly the scenario that we are anticipating happening. Some of that might even be happening right now before we even reach the end of March. And if for whatever reason the Biden administration decides to extend that a couple of more months, well, it's going to be havoc. It's going to be a mess, right? So it is coming, ladies and gentlemen. It's just a matter of when and where, right? Because some states are struggling more than others. So for example, big cities like LA and in New York, you can start seeing some of the properties actually going down in price. And I've even felt that myself, because even the property taxes of my properties in New York are starting to notice that difference. They're actually gone down by half in comparison to my property taxes in Florida, which double one way or the other. So this scenario is actually very familiar because it reminds me of what happened back in 2008. And there's a movie right here called The Big Short. Of course, I'm not going to play the clip here because I don't want to get fined for copyright. But you can actually look this up yourself. You can actually rent it directly from YouTube. I'm not sure if the movie is on Netflix. So The Big Short, the title is right here. And then the thumbnail, it's right here. Okay, so there was a part on the movie where it's actually towards the end where the big guys, the Wall Street guys, they wind up showing at a renter's house, and they were saying, "Hey, how come you haven't moved yet? Like, how come you haven't packed your stuff yet?" He said, "What are you talking about? Like, I'm the renter here. I haven't lost my property. I've been paying rent the whole time." So it turns out that the landlord was the one that was unable to meet the rental obligation. Now, granted, that was a different scenario because at the time there were a lot of mortgages which had an adjustable rate, and the moment that they started, going up and down with the interest rate, some of them were unable to meet their financial responsibility because the monthly payments actually exceeded what they were actually collecting in rent. So it's always the little guy, it's always the little people, it's always that family who it's unaware, who didn't know the renter was actually paying rent, and now they're forced to look for another place to live because they did not know that the house wound up being in foreclosure. Of course, that situation is slightly different, but not so different, right? Like you see in some of the travel movies, same thing, but different. So you can actually see that happening in here. The longer they extend the moratorium, the more you're going to push the property owners into foreclosure or into having to do a forced sale because they just don't simply, they don't want to damage their credit. So it's either one way or the other, but the outcomes are pretty much the same. Whoever is renting out in that property could end up negatively impacted, right? So now moving along, the next article that I have here, I'm going to try to be as neutral as possible with this because it can go either way depending on how you want to interpret this, right? So this article, it's quite interesting because it talks about the emergency bans on evictions and other tenant protection related to coronavirus. So we are here with the purpose to inform, right? We want to provide assistance in any way we can to those families who are really in need and to those landlords who are truly in need because sadly, with any crisis, some people do the right thing, but some others, they do take advantage of the situation. And this article actually proves it. So Capital Insider, landlords allege tenant have money but refuse to pay. Some tenants are truly gaming the system, and that it's leading up to that wave of foreclosure that we are anticipating just because the property owners are unable to meet their financial responsibility. However, there are people, people like these who are refusing to pay rent, even though they could. They are ruining it for everybody, not just for the landlords, but also for the families who are truly, truly in need of help. Those families who are maxing out on their credit cards, who don't know what else to do so they don't wind up being homeless. So this article right here is meant to provide let's say additional information so that way you can justify or win the case, whichever way you want to put it, so that you don't wind up evicted. And at the same time, it also helps the landlord to identify those tenants who are just truly not wanting to cooperate, right? They just want to maximize the bad news and the situation to their advantage. Not so much bad news for them, but definitely bad news for the property owner. So down here, you're going to see the details that the CDC issue an order, and the order prohibits residential landlords nationwide from evicting certain tenants throughout March 31st, 2021. So those tenants, they need to prove that they're truly going through a hardship, right? And ideally, nobody should need to have to prove anything because this is a tough situation for everybody. But like I said, some people truly take advantage of the situation you've seen in the article. So those tenants have to be able to evidence as much as they can. They could evidence that they have tried their very best to obtain any type of government assistance. They have to prove that they have been unable to pay rent due to substantial loss of income. Some people truly, they lost their jobs. Some people are unable to find jobs, maybe because they cannot step out of the house because of a sick relative or a parent or a child, or maybe because they just simply cannot afford a babysitter because it's more expensive to hire someone than not. Or maybe they just want a stranger at home because at the end of the day, isn't that the whole point of like not having to go out there so that you don't wind up infecting your children with COVID. But anyways, so back to this list, you also have to be able to prove that you're making your very best effort to pay rent, even if you're making partial rents, right? And in addition to all of this list that you see here, you also have to meet either one of these criteria. One is that you have to earn no more than $99,000. And I'm sure there are families out there who are not even close to the $99,000. And if you're filing jointly, then you cannot exceed $198,000. Another item on the list is that you were not required to report your taxes in 2019, and that you, in one way or the other, qualify to receive some type of assistance from the CARES Act. So that's on the tenant side. But then you, as a landlord, you can also see, okay, well, I need to see some evidence and see justify. We need to work together. You see, the point here is that landlords don't want to evict people. Landlords want their tenants to stay. I know that for some it might be very difficult to comprehend, but their goal is not to evict anybody. It is a difficult situation for everybody. And what's important here is that there is open communication, and that, as I've always said in any of my videos, to create a win-win situation for everybody. Now, I know I've gotten a lot of messages and comments on my prior YouTube videos asking, from people asking me, what is it that I'm doing? How am I handling? So like I said, communication is a key part. When this first hit, the first thing that I did was to reach out to my tenant to try to figure out how can we work together. Have you been impacted? Were you not impacted? And what do we take it from here? Do we create a payment plan? Do we not create a payment plan? I know based on industry standards, speaking to some other people, some people have worked out payment plans. Some has just simply reduced the rent in order to not lose that good tenant because you qualified them in the first place. So you want to make sure that they stay, right? And there are some people out there who have access to a larger portfolio, and then what they're doing is that they're helping their tenants relocate in between their own properties. So one, let's say, for example, you have a tenant out there who was originally renting a 3-bedroom apartment or something like that. And then this person got furloughed or maybe lost their jobs, but you have a studio available right now, and that person was, looking to downsize. So you can actually help that person get access to that studio and still keep that tenant, and at the same time, not foreclose on the studio, but then figure it out with the 3-bedroom apartment. A lot of people are moving in together in order to save on rent. Maybe there are people looking for roommates. Maybe you have an apartment where you had 2 roommates moving in and one had to move out because of what happened with COVID, and they moved back with their parents or maybe moved in with another relative. And then now you have a room that is vacant. So if you find out that one of your tenants is struggling and does not mind sharing the living space, you can actually recommend them to, meet and share an apartment and split the cost by half. The point here is that you want to make sure you're creating value for everybody. Other landlords are actually looking for government assistance themselves just so that they can help their tenants, right? If you come to think about it, that's an excellent idea, because, hey, if you're helping your tenant to qualify for government assistance, you're finding out about the different programs out there and you're helping them get access to that. What's going to happen when they get access to that government assistance? They're going to take that money, they're going to pay rent. And when they pay rent, you get to pay your mortgage. So you're creating a win-win situation. Not only the tenant has a place to stay and also sufficient money to cover the rental obligation, you are also meeting your own financial obligations as well. And what this does is that it's strengthening that relationship with the tenant, right? So now the tenant is thinking, oh my God, my landlord truly cares for me. And, if it wasn't because of him or her, I wasn't able to get access to these government funding. And you're developing this relationship that becomes strengthened over time. And then you can guarantee yourself a long-term tenant, someone who's going to stay, who's going to care for your property, and it's going to respect that relationship because you vouch for them when they needed you the most, right? So something to keep in mind. This article as well is actually very interesting as you scroll down, because we're having a list of all 50 states and where they are either doing a hold on evictions or maybe adding an extension. Same thing with the utility shutoffs. So as you scroll down, you get more localized updates depending on the area that you're investing or that you're residing. So for example, we already know, it's not news, that California decided to extend its eviction moratorium all the way out to June 30th. This is something that I cover back in my February episode of market updates. And then as you scroll down, you see Connecticut extending it all the way to April 19. Delaware, well, it's actually even shorter, March 10. As you scroll down, you get to see the differences in rate. Some states are listed as no. I'm not sure if they're just simply not holding on any evictions whatsoever, or if they're just simply not making any changes to that federal order that was issued earlier this year, right? The reason why I'm showing you this, well, aside from giving tenants and landlords enough information so they can use it to resolve whatever situation they could be having with the tenants and with the evictions, it's also to provide some kind of insights or tips as to what areas to look for to invest if you're actually on the lookout for the next round of properties that are going to hit the market at a big discount because of the waves of foreclosures that we're anticipating. So if you come down and you take a look at this, pay close attention to those areas where there is an extension. I mean, for all I know, some property owners are already struggling as it is today. We don't have to wait all the way until the end of March. Some of them could be at the verge of foreclosure at this point in time. We just don't know it. But what I'm anticipating is that if you're coming closer and closer to the end of March, there's a very big likelihood that they're not going to be able to meet their debt obligation if their tenant is still choosing to not pay the rent or just unable to continue to pay the rent. Like I said, one way or the other, the goal was to protect families, protect COVID from spreading, but one way or the other, it seems that it's backfire and it's just impacting the little guy once again. Doesn't matter what you do. If you sell, the family's going to wind up being homeless. If you lose it to the bank is going to foreclose and take the property back, and therefore the family has to move out anyways. So This article we already talked about. And like I said, the intentions are great. America's eviction moratorium has probably saved thousands of lives. The goal was to prevent COVID from becoming bigger than what it is, and to protect the families. And it's just an interesting side of the story. Is like, it doesn't matter what you do. There's always a side effect to something, whether you could have foreseen that or not. Someone winds up impacted anyways at the end of the day. And that's pretty much what I have on the eviction moratorium. There's another article right here, but it just simply corroborates what we've been talking about so far in terms of the extension day and how we have all the way until March 31st, unless once again the government decides to provide another extension, which we already know that according to some states, some of them are choosing to do so, right? So now moving along, let's just talk about the round of stimulus, because obviously it is very important, because if we are getting stimulus to the people, now maybe people will have the ability to pay some rent, so that way it can help ease up some of the issues that might be coming up from landlords unable to collect rent. And at the same time, part of the stimulus also goes to businesses, right? So if you're managing your rental portfolio like it is your business, then you should be able to apply for some of the loans available for small businesses. Although I know last year has been quite a mess, so to speak. Some businesses who didn't need to qualify wind up qualifying for them. And some of the business who truly needed access to those fundings, just because they didn't have their accounting in check, or just because they couldn't verify some type of information, they wind up getting themselves into a lot of financial trouble as they were unable to tap into those available funds. So the good news here in 2021 is that the bill has been approved. So the 1.9 trillion COVID-19 relief bill, it's approved, and now at this point is trying to figure out what's going to happen next. When are the funds going to be dispersed? Where is it going? What are they assigning the use for? And for that, we're just going to continue monitoring the market to see what the announcements are going to be, right? Now, moving along, we have some very interesting news when it comes to the weather, right? So it has been a quite interesting year, and we haven't even made it past the first quarter of the year. But as you know, some of the southern states have been getting hit with massive snowstorms, pretty cold weather. And of course, it's no surprise to all of you that Texas had been hit with the most, right? And as you scroll down, I mean, we already know lots and lots of families in the cold without drinking water. As if that wasn't enough, right? Trying to deal with the massive, outage and electricity and energy. Some of them, as they started getting access back to their electricity, they were hit with like ridiculously expensive bills. Look at this. Updated gritty bill, 1,300 square foot heat set at 60, no laundry, no running dishwater, no stove, even cooking. Only use hair fryer, lights off during the day, candles at night most of the time. And they wind up being hit with a $5,000 bill. It's ridiculous. And the families are not the only ones who have been hit. Businesses as well. They've been slammed with thousands of dollars in power bills after the storm. So if you come to think about it, it's like, oh man, like this is really cutting it close. Not only they have to worry about COVID impacting their business, maybe having accessibility to the SBA loans, maybe not, trying to figure out how are they going to pay for their business next month's rent, or perhaps even property taxes, or their employees. Now they're going to have to worry about paying a ridiculously electric bill that was $129 the prior month, now is $2,738. It's just outrageous, right? So quite interesting to see what's going on. For those who are looking to still relocate to Texas, I know there was a big boom going on recently with Tesla and other Silicon Valley companies looking to relocate in Texas. So this is definitely something that you should take into consideration. But not all is bad when it comes to the big state, right? So here we have an article and where the IRS is postponing the April 15 tax deadline for Texas residents and businesses all the way out to June 15th. So if you're residing in Texas now, you have a couple of extra months just to, get yourself together, try to apply for whatever government assistance program that you could qualify for, and, just trying to get yourself together and be able to continue with everything that you have originally planned for the year, because, life goes on, and it's all a matter of like taking advantage of all the assistance that we can get, right? So now, moving along. For those who have been talking about the loss of jobs and as an area of concern, so to speak, like I said, I've been telling you over and over that more than the loss of jobs, there was just simply a shift. There was a migration from one field to another. So people who were working extensively on the entertainment area, on the tourism area, they just simply migrated to other jobs. So, and this article actually proves it. So 4 million hotel restaurant workers have quote unquote lost their jobs, but here's how they are reinventing themselves. And it gives an example of a person who used to work as a national sales manager, and now she works as a construction estimate software company. So it's all a matter of, like the article says, reinventing yourself, right? In fact, recently we actually met someone who was working at the hotel industry somewhere around 10 years or so, talking about longevity, right, and seniority. But, it got furloughed, the hotel business is not doing very well, and now this person is actually a sales rep in Tesla. And hey, there's a lot of demands for electric cars, and he is sure doing very well in Tesla. So again, it's all a matter of like trying to see, okay, is this the field that I still want to stay in? What are my transferable skills? So let's say in the example of this guy who wound up being working for Tesla. Well, you need to be a people's person, right? You need that for the hotel business. You need that for any sales job. Understanding the need of the customer, having the ability to educate the customer, and having the ability to provide a solution to the customer. That's what you will need in order to work in the hotel industry. And those are transferable skills that this person was able to take to Tesla. And for those who don't want to remain in their old jobs, maybe they hated it, hey, this is a perfect time to reinvent your career, reinvent yourself, and move into a new field. There's a lot of shift when it comes to employment. All right, now we're up to the part where people are talking about houses and how everything was so expensive, and I was unable to get my hands on it. Every time a house came into the market, I got outbid by 2-3 families, and they were already at a really high price. I can't seem to get my hands on a house because I always get outbid, right? Well, the good news is you don't have to feel so bad, right? Because there are other people who are, sort of like having second thoughts with a decision because they gave in to the fear of wanting to buy a house. FOMO, right? They don't want to miss out. Look at the houses. They're going up. They're going up. They're going up. I want to get my hands on it, right? And this is an article about a buyer who rushed to buy a home during COVID and is now regretting it, right? So Stella Juan spent months researching for a home to buy, getting outbid again and again, and the white-hot real estate market of the Los Angeles suburb. Finally, her offer on a beautiful Santa Clarita house was accepted in August, she said. The graphic designer, 30, paid roughly $600,000 for the house. I know for some that might be a normal number. Depending on the state where you live, you might find this amount to be outrageous, right? But after sleeping there for only a few nights, okay, only a few nights, she had an unfortunate realization that, I hate this house. I hate this house so much, right? And this is what happens when everybody is rushing into fear, is rushing into the fever of something. People don't think it through. They buy with their emotions because that's the bottom line. They didn't want to miss out. They thought that, hey, I should go into this. And even this person is saying, I should have seen all the warning signs, but the pandemic housing fever got the better of me. So if for whatever reason you were unable to get your hands on the property that you wanted, maybe it was a sign that it wasn't meant to be for you, because look, you're not the only one who's feeling bad about it. Even those who got access to a dream home or a property, they were just simply, they're regretting it right now. People were so panicked, right? So quite an interesting article. I'm just going to leave it over here so you can take a look at it and, just get a new perspective when it comes to buying compulsively in the real estate market. Now, moving along, for those who are looking to relocate or for those who are actually looking for new areas to invest, consider taking a look at this article. Remote workers wanted. Small cities to offer cash to those who are looking to relocate. Isn't that amazing? Now you get to get paid by the government. You're getting an incentive to move out there. Why? Because these small cities are looking for ways to stimulate the local economy. And for you as a real estate investor, if you're looking for new areas who others haven't truly tapped into or oversaturated with properties, maybe this is your chance to go into some of those cities and just simply check them out. And what we'll do is we're going to go over the list of cities. But before we do that, if you're enjoying this episode, once again, do not forget to hit the like button right down here so you can help this episode rank and help others looking for information of this kind get access to it. And if for whatever reason you have a friend, a family member who you know is going to make a good use of whatever I'm sharing with you today, feel free to share the love and share this episode with that person so that they can educate themselves in this subject as well. Now, once again, moving along, places that pay you to move there in 2021. So we have a big list down here. We have Maine, Vermont, Alaska, Newton, Iowa, Tulsa, Oklahoma, North Platte, and Nebraska. I believe this is pronounced Chattanooga. I'm not entirely sure, but hopefully I'm pronouncing it right. And Tennessee. And look at all this list. And if doing this locally is not your thing, hey, you can go international. Countries like Chile and Switzerland and offering big incentive for people to move out there as well. So there is one list. There's another list right here that you can also check out. These 6 cities and the state will pay you to move to them. And again, it goes both ways. It goes well for tenants who are looking to relocate, homeowners who are looking to relocate, but also real estate investors who are looking to tap into an areas who haven't been overly exploited. So that way you can come in and add value and help revitalize the economy of the city. So we have Tulsa, Oklahoma. We have the Ozarks. And funny enough, I don't know if you've ever heard about the Ozarks, but it's actually a Netflix series named Ozark, and the name of the series actually took after this city right here, or a small town. So hey, if you're feeling a little bit adventurous and you want to tap into things and check it out, this is perfect for you. You also have Savannah, Georgia, Topeka, Kansas. So, this list is going to be all available in the description box below so you can actually take a look at it. All right. Now, moving along. We have this website here. It's called Trading Economics. It's somewhat boring, but not really. And so what this website does is that it provides you with information from all over the world. Any statistics that you want to find out, in this case, we're in the United States, but you can actually learn all about the Euro area, the UK, China, Aruba, Australia, Barbados, you name it, right? So as you come down here, you will see in this chart, and I just found it really interesting because I wanted to compare the statistics of the number of houses that have been sold. And literally, as you see this, we are, I'm not going to say coming close to a historical high, but if you look at this 25-year chart, we are getting to the point to hit the top, just like we did right now in 2021, to 2005, 6, and 7. Of course, like down in 8 and 9, that's when the big downturn happened. But this is like the bloom, like, sounds familiar. And if you look at it, if you zoom in and we're comparing the numbers of 2021 in comparison to the numbers pre-pandemic, we see that the houses, there's a high demand for it. Sales are hitting record highs. And if you are a flipper, or if you are a person who's actually considering selling your house at the maximum price, you still got time to do that before the downturn begins, so you can maximize your profits on the equation. All right, so moving along, we have left the realm of anything that has to do with residential houses, and we're moving on to commercial real estate. And we have this very interesting article right here that talks about anything that has to do with industrial real estate, right? And according to this article, there's an anticipation that the industrial real estate vacancy rate, it's gonna rise with steady increase in supply. So remember how I was talking about it in prior episodes, and where if you're looking for ways to diversify your investments from rental into other areas of real estate, I talked about the possibility of building or investing in warehouses because of the boom that is happening with anything that's online related, right? As the pandemic started, more and more people started ordering their items online. Companies like Amazon or Walmart has needed to expand their warehouses. And not just that, there was also a boom of any other online businesses out there. And guess what that booms create? It creates a need for warehouses so that they can house their inventory. I mean, they're not going to order all those items and start packaging in their houses or their apartments. Some people do, but if you're growing really, really big, there's this slight chance that you might not want to keep all that merchandise in your house, and there will be high needs for inventory, right? For inventory storage. So for those who are actually interested, this is an excellent article for you to check out and get more into the industrial real estate space, right? Now, since we started talking about e-commerce, this is actually a good transition to move from real estate into the stock market, because like I said in my prior episodes, a lot of you have been requested we expand our subjects from real estate all the way up to multiple ways to diversify your investment. And we want to start the stock investing section with a company called Stripe. So Stripe, it's a payment platform. So if you have to think about it, let's think of the Apple Store, right? So Apple typically walks around with a little square car, and they're just simply charging, people for their purchases and stuff like that. So Stripe offers something very similar, although without the square. And they're basically the go-to platform for most online businesses nowadays, small businesses, right? We're not talking about the Amazons of the world, the Walmarts of the world, but small businesses like us and Novarise or any others. We are sort of like merging our platform with Stripe in order to be able to collect payments in any type of services that they are providing, or any type of products that they are selling. So Stripe is currently a private company, but they have been talks that they might go public. So another peer in the area for you to consider, just to understand the magnitude of how big Stripe is. There are other players in the area. We're talking about Venmo, for example, PayPal, who happens to own Venmo. A lot of people are investing in PayPal stocks because they are the next generation of payments. There's also Zelle. People are transferring money back and forth electronically. Nobody, for the most part, very few people are using actual paper currency. Most people are using electronic transactions, or perhaps even credit cards, or perhaps even Apple Pay. Things are moving more and more towards the electric or the digital realm, and this will be no exception. So definitely be on the lookout. Like I said, the company is not out there yet, but it's definitely a contender for you to keep in mind once it goes public. Now, we talked about Stripe. Now let's just talk about gold, right? So back in my February video, I talked about ways to diversify your investment into precious metals. Gold is one of them, and also silver, it's another one of them. And as you can see in this article, gold surges above $1,800 to set it at the highest in over a week as rising rates rattle stocks, right? So here's the thing. When people lose confidence in the economy, when people are afraid of inflation coming, there is the tendency to look for something that can supplement or an alternative to the actual currency. The more and more currency is being printed, the more inflation we create, and therefore people are losing faith in the strength of the dollar. So what is it that they do? Well, they are going towards precious metals or cryptocurrency. That's why Bitcoin, it's going all the way up because it's considered, the people's money. And gold is not different because it has withstand any type of excessive currency printing, in history. So in fact, the demand for gold is so high that the houses that are trading or supplying golds are actually low in stock, or some of them don't even have stock. And whoever places an order in gold, they have to wait weeks, sometimes even months, before they can get a hand of the precious metal, as a way to protect their investment, as a way to diversify against any changes that can happen in the market. So if you are able to get your hands on gold, please go ahead and do that. And if you're not all is lost, because you still got silver, right? Silver is still relatively accessible for people to tap into. The price is currently at $27.68 for an ounce. So it's still pretty accessible to you. And why is it that I'm making so much emphasis in silver? Well, it's more than just the fact that it's affordable, that you can still get your hands on it. Remember back in that video that I presented to you in February, everything is going green nowadays. Not just the US and the Biden administration, Europe is going green, like the whole world is going green. China is going green. So what does that mean? It means that the demand for electric vehicles is just simply going to be on the rise. It's going to skyrocket. And what do electric vehicles need? They need plenty of silver. They need a lot of silver in their cars. So that means that the demand for silver, it's going to skyrocket as well, which, eventually that amount of supply, it's going to become limited, and that's what's going to drive the prices all the way back up. So while you can, and if you're looking to diversify, consider gold or consider silver. But back to the conversation about the stock market, right? So we talked about Stripe, we talked about precious metals and the impact on the electric vehicle. Let's just talk about the electric vehicles now. So let me introduce you, for those who haven't really seen it or haven't heard about it. Here is Lucid Motors. And they are, one way or the other, considered to be the rival of a Tesla. Only with the caveat that Lucid, it's a luxury vehicle, is what they like to call themselves, right? So Lucid agreed to combine with Churchill Capital, a special purpose acquisition company called a SPAC. And if you don't know what a SPAC is, I have an article right here. It is a special purpose acquisition company, and it's a shell corporation listed on the stock exchange with the purpose of acquiring a private company, thus making it public. So Lucid is not publicly traded yet. Why? Because their cars haven't even hit the market yet. They will be available in the market. As you can see, this beautiful website here. Look at the models. Their pure electric sedan will start hitting the market in spring 2021. So as of today, you can actually invest in the electric car arena, whether through Tesla or with Lucid. Now, I know a lot of you might say, well, Tesla, it's quite expensive. It's pricey. We're talking about $700.68. That could be a little bit steep for me. But if you're looking to invest on a peer or a competitor that you think could have the potential to, be side by side or compete side by side with Tesla, consider investing in a Churchill Capital. The stock is a lot more affordable. We're talking about $34.19. Or you can also consider buying partial shares, fractional shares of Tesla. So platforms that you can leverage in order to do that are Stockpile. There's also Robinhood, although Robinhood hasn't been too much on the good side of the news, right? And there's also Charles Schwab, who will allow you to buy fractional shares as well. So if you want to still tap into Tesla, that's one option. But if you want to expand your horizon and look into other possibilities, then consider Churchill Capital. Why is Lucid such a big contender, right? You might wonder. Like, there's plenty of other competitors out there. Why is it that they are so special that they can overtake Tesla, right? Or that they have the potential to overtake Tesla? Well, there's a video out here that is actually by CNBC, and I'm actually going to leave the link down below in the description box so you can check it out. It's actually a quite very interesting video inside Lucid Tomorrow's plan to take on Tesla. So if I were to bring this back a little bit, just so you can see it. So look at what they are offering here. So these are all the models of the electric cars out there, right? And look at how the market is actually dominated by Tesla right here, right? So this is what we have available in the market. So we have all the Tesla models all the way at the top. We got the sexy cars right there, right? We got the S, the Model X, the 3, and the Y. And then followed by all the other ones. And Tesla is dominating the market because they have the highest range possible in terms of mileage, right? That means that you don't have to make so many stuff, because one of the biggest concerns that people have about getting an electric vehicle is the fact that they have to worry about charging it, that you cannot go very far without running out of battery, which is something that having a gas vehicle you can facilitate, because you can just stop anywhere to get access to gas and just pump up the car and just continue going, right? So now, when you compare this to the remaining brands that are available in the market, Chevrolet, you have Nissan, Audi, BMW, yada, yada, you can see that Tesla is dominating the game. But if you were to scroll, if I was to scroll down a little bit forward, now you can see that Lucid is offering an additional 100 plus miles over the Model S, which is the car that Tesla offers with the highest mileage range possible. So the stats are looking very promising for Lucid. They are about to come out. So if you're looking to diversify your portfolio on the electric car vehicle side, this is definitely one thing for you to consider. Moving along, and now it's time to talk about crypto. Why is crypto so important? And what does it have to do with semiconductors, right? Semiconductors are big, right? In order for you to be able to mine cryptocurrency, call it Bitcoin or Ethereum, you will need mining machines. And those mining machines utilize a lot of semiconductors. And as if that's not enough, think about the electric vehicle hitting the market. Think about your phone. Think about all the computers, the multiple computers that families are going to be buying because they are working from home and they need more space and they need more equipment. That only plays the semiconductors that are available in the market in a shortage. And what happens when there's a lot of demand and not enough supplies? Well, prices go up. So if you are looking to invest in something that's related to cryptocurrency, but maybe you don't have the stomach to go into the whole cryptocurrency world because it's way too volatile, another option for you to consider is investing in semiconductor stocks. Why? Because semiconductors are not relying solely or exclusively on cryptocurrency. They do, like I mentioned earlier, provide all sorts of different services. They all serve different industries. And if cryptocurrency doesn't do so well in the future, you still have the demand for electric vehicles. People are still going to be using their phones, and people, whether you like it or not, are still going to be looking to, upgrade to the next computer and so on. So if you're looking for ways or for, let's say, what's the term that I'm looking for ways to diversify your portfolio with semiconductor stocks, some of the ones that are really good, worth considering will be NVIDIA at 565.65 cents. If that price is quite steep, remember you can also get fractional shares. But if you want to move on and pass on that, there's also their competitors, Micron Technology, and there's also AMD at 84.74 and Micron Technology at 88.23 cents. And now moving along, for those who are looking to further diversify their stock portfolio even more and still be able to combine that with a little bit of real estate, then consider looking into Home Depot or Macy stocks. And I know Macy's, wow, it seems a little bit surprising for me even. But hey, thanks to the pandemic, they have a good trend. Why? Because people are getting access to stimulus. People are spending more time in their homes. And what happens when you spend more time in your house? You want to upgrade it. You want to make it look pretty. So a lot of people are buying new appliances just to bring up the value of their homes. They're building up a new deck. They are buying paintings. They're buying flowers. And they're just, doing whatever they can to make it pretty. And that includes also decorating, right? You want to go to Macy's to get the latest furniture, to get the latest, most beautiful springy curtains, so that way you can give a different feel and feel that you actually want to work from home, because that sometimes could be very difficult for people who are accustomed to the office space, and now they have to, be cramped in a space and where they just really can't go anywhere. So if you're considering diversifying your portfolio even further, hey, take a look at Home Depot and Macy's. And of course, I'm going to leave the article down here so you can actually take a good look at it and, find ways to diversify your investments. So that is pretty much all I have for you today. Hopefully you enjoyed this episode. I know it was quite a lengthy one, but I found it necessary to help you connect everything from end to end, all the way from the beginning of the evictions, give you options to diversify, whether it's through the stock market or through precious metals, or maybe even within real estate. So let me know what you think about the episode in the comments down below, and I will be seeing you soon. Take care, stay safe out there, and I will see you guys next time. Take care. Bye-bye.